Going on, guys? It's your boy PS239 Riverboy, and I'm back at it again with another video. And we're on the Robinhood account, guys. And I just added another $50 on here, so our net even break-even price is 180, and it looks like we're at 180 right now. And I still have $2.76 extra buying power from all the puts and calls we've been doing, and we still own all of the shares, guys. So once FFAI starts pumping back towards the 50 cent range, we'll actually start making or start having a decent stack of cash on here, because we're acquiring more shares of stocks as everything falls down in the market because of this war that's going on. A lot of stuff is going to fall, and that is actually the perfect time for us to get in, guys. So I just added a bunch of new stuff to this dividends list, and I got a bunch of growth dividend stocks, a bunch of long-term high yield or a long-term mid-yield dividend stocks that beat inflation but also kind of keep your capital relatively the same. And then I have really reliable dividend stocks that don't give that high of a dividend, but they grow a lot, like ticker O and SCHD. And then I have some more weekly dividend paying stocks, and I have another high risk 10 or 11% dividend paying with STRC. That is basically MicroStrategy's new company, which is just to buy Bitcoin and sell Bitcoin. This is a strategic fund where they buy and sell Bitcoin at specific times. And I also, when I bought MicroStrategy the first time, it was $50. Then the stock price rose all the way to $2,000, and then they gave me 10 shares for every one share I had, and I bought around 50 shares. So then I had 500 shares, and then you know what happened again, guys? MicroStrategy pumped all the way to 2,000 again, and then they gave us another 10 shares for every one that we had, and now I had about 5,000 shares. And I just did a put to get myself out, and this is when it went all the way back to 400 again. Like, every single time they reduced the price from 2,000 and gave us 10 shares for each one, it dropped the price of the stock all the way back to $20, guys. So it rose up again from $20 to now it's back at 150. But now I have like 500 shares from like the 50 I initially bought, which is pretty fucking nutty. And it's pretty crazy that they just keep doing that. The price keeps going up, going up, going up to a price where people won't, like, it's like a price where people like tend to think, oh, why should I buy a $2,000 stock and get a micro fraction of a share when I can buy a stock that's $20? So that's why they split your shares and make your one share into 10 shares, so then it can go from $150 to $15. So that's pretty much all it is. They split the shares up so that they can get, it's like a psychological thing to get people to keep buying into the stock, even though the value of the stocks had went up so much in the course of time. And we're only at a 50 billion market cap. So if MicroStrategy wants to go to $300, they would have to go to 100 billion market cap. And that's pretty much how stocks work. And depending on the market cap, how many stocks there are total, you will the price will fluctuate up and down. So I added another $50 on here, guys, and I want to kind of add diversify the portfolio. So what I was going to do, I'm just going to buy one share of a couple of different stocks. I'm gonna buy one of this stock called Blocks, because it is, I'll just buy shares, buy one, trade now. And I don't care because I'm a dividend investor. I'll just go for the ask price someone's asking so I can get it right now. And it looks like they're going to sell it to me in the 24 hours market. And I did buy it, guys. So I don't care about the price because I know eventually in time I'll get it back. And this one's 30-day yield. It's gone down because the price of it has gone down. But it has a ridiculous dividend rate, and it pays every single week. And this one literally in the it has doubled since it started, or it went up from a double from when it started, and then it came down, and now we're at some of the lowest prices it's ever been. But this is a weekly payer stock, guys. This stock pays every single week like UDTE, and it's just going to diversify the portfolio a little bit. It's going to have us in a little bit of crypto. And then another thing I wanted to jump into for another weekly payer that is pretty cheap right now in relevance to what it normally costs is the YMAG. YMAG is 20 cents above its 52-week low, and its 52-week high is $16. And these guys flow off of this Magnificent Seven. The Magnificent Seven stocks, the 7 best stocks in the entire stock market. This does puts and calls on those 7 stocks, and it makes money through that way, and it pays you a dividend every single week. So I'm gonna buy 1 share of these. Okay, 1 share, and like I said, I don't care about the price because I'm gonna be holding these stocks for the very, very long time. And then once I get 100 shares of any one of these stocks, I'm gonna start doing puts and calls. So then I'll be able to own the stocks, collect the dividend, and also not worry about the downside, because I'll spend a little bit of my dividend on a put or a call, guys. So I got $24. I want to diversify and get into another stock, and I want to diversify it even further, and this time we're going to go into a gold stock, guys. Gold has been booming, but we're also on the downtrend right now. And so this one is a weekly paying gold stock, and as you can see in the past year, it has been going up and down, up and down, up and down. And when this volatility goes around, the dividends are really high, and also we could do some shake moves because some of these prices don't drop really hard until after that dividend was paid out. So we could get the dividend, sell the day before, and then make sure that we buy back in on a certain X date. And I believe the X date for these are on Thursday. So that means if you don't own the stock by Wednesday, then you won't get the dividend for that week. So as long as when I do my flips, I sell them by Monday, Tuesday, and pick it up by Wednesday, I should be able to still get the dividend for that week. So like that's going to be one of the tricks we're going to play when we don't have 100 shares of a stock. But once we have 100 shares of a stock, we don't even have to worry about it anymore, because we're just going to take puts on our positions, and say our positions do tank, we're just going to execute on somebody and keep our shares and also keep the dividend, because we own the stocks at the X date. So we've got about $9 more, guys. So I'm gonna buy me an MPT share because I like Medical Properties Trust. They have a solid dividend, and it's consistently growing through the past 5 years. I've had this stock for a very long time, and I was able to buy over 100 shares when it was just about $4.50 a couple years ago. Yeah, I think I got to get a 5. It was just under $4.50. This is more like 2021 actually. 2024 actually. Yeah, it was like $4.50. I was able to buy 100 shares, and I think I sold it for around $6. It had to have been over here, and then I scooped them all back up for around $4 again. And then now I haven't done anything with it because I don't want to do too many puts and calls on my retirement account, because then I have to be focused on it. And I kind of switched mostly all of my strategies to just holding for the very long term, because you still pay taxes in your retirement account. You just don't pay them right away. Like we pay these taxes every year on this account. On a retirement account, you pay all of your taxes on the once you cash out at the very end when you retire. So say, and that could be a good thing or could be a bad thing. It depends on what our government does. Usually they do tax reliefs on retirement money, but lately with the Trump administration, and I don't want to get put on a list for saying some shit, and I'm just voicing my opinion on what they're doing to our IRAs. They actually want to increase the retirement age to 73, and they want to increase the taxing fees when you pull out of your retirement account early or on normal time, which is kind of crazy. And it's because they spent all of our Social Security money, and they don't have enough Social Security money to even pay out the people right now, which is pretty crazy. Um, I honestly think that they shouldn't spend money on anything if they don't have the money to spend. And our country is $35 trillion in debt. They shouldn't spend anything until that debt is down. But that's just my opinion, guys. So I'm gonna buy one share of Medical Properties Trust because I know it's a stock that beats inflation, guys. It holds its NAV pretty well, and it even grows its NAV, but it also increases its dividend, which its dividend rate is around 7%, which beats inflation. Inflation is around 4 to 6%, sometimes 6 to 12% on bad president years, but it just depends on who is our president at the time. And right now, Donald Trump is decreasing inflation, and I think that's just because he wants himself to look good. So he's decreasing inflation, but that's because he wants himself to look good, and he wants assets to tank in price so he can actually scoop everything up and sell it for a higher price, guys. So that's why I said it's probably the perfect time for us to get into the market, because everything is tanking, everything is falling, and right now this is probably the best time to buy some good dividend stocks on for sale. Pretty much all of these stocks are on sale right now, guys. So I'm picking a bunch of good diversified stocks. I have like a beer company, I have the S&P, I have the NASDAQ 500, a medical company, we have the Magnificent Seven, we have a car company, we have another fund basically with a diverse portfolio in it, like the NASDAQ 100, but they do their own specific stocks, and this one actually we're more into technology right now, and we have a lot of finance and healthcare and communication services, because these are the four main industries that are always needed and have a lot of stake in it right now and are in the push. But right now, energy is actually the best, most profitable sector this year. So I can only assume that their energy position was 1% at one time, and then it has doubled, because energy has literally done 150% on the year. So I wish their energy allocation was a little bit more before, like from last year, so that they could have gotten more gains on that. But I'm liking the way we got it diverse now. It's not all in one stock or one dividend stock. So that means if one of these stocks decide to tank, like FFAI, it's not going to have such a big drastic effect on my portfolio anymore, guys. Like, it's not going to make the account swing harder and harder. The more money you get on here, the less this little candle calendar moves, because it's going to take a lot more money for you to move. In the stock market, usually doesn't move more than 1% in a day, and if it does move 2 or 3% and retrace in the same day, that's like crypto stuff, and it's because the market is extremely volatile, guys. So I'm probably going to keep this dividend list up because I do want to get a little bit of growth dividends, guys. Like when I was telling you about growth dividends, these guys don't pay much like the other ones where they pay a lot of money every single week or every single month. This one pays monthly, but it's not that much. It's very little, but we're not worried about that, guys. As you can see on the fund, if you look back at it for the past 10 years plus, if you bought SCHD at $8, you would be up 272%, plus the 3.39% dividend yield that you get on your stocks. And that's a 30-day yield. I think their dividend was somewhere around 12% on their dividend yield, and that's only because they've actually reallocated their stocks into energy. As you can see, they reallocated their energy as of May 27th or May 17th. They've reallocated their energy, and when they reallocated their energy, they went into energy when it was at the lowest it has ever been, guys, and then now we're at a very high top. They can sell or reallocate all of their energy into utilities, because utilities is tanked. It's tanked down and we're at very low prices. They could reallocate their energy into utilities as we hit support levels and basically lower down their positions as it keeps going up, because if energy doubles again, it's going to be around 35 or 40% of the portfolio, and everything else is going to slowly lose its numbers. So they need to reallocate that into other sectors so that your portfolio is diverse. And say utilities is down on the year, but energy is up. Say I put all of my gains from energy into utility, and then I let energy fall, and energy does a dive, but then utilities goes up, guys. So you're keeping your capital, and you're also learning how to preserve and reallocate your capital. So it's kind of good to have a bunch of good stocks that are going to keep paying us every single week, every single month, and we're going to just keep stacking all of that cash, guys, and buying more stocks. So now that we have a nice diverse list of stocks, so when we get a payment, we're going to just look at the stock that has been performing the worst in the week or worst on the month, and we'll reinvest into that stock so that when our money is being allocated properly. Because if you're investing in, like, say a stock surges 60%, you don't want to reinvest into that stock that week. You would actually just want to take profits and maybe take a put on that position so you can preserve some of your capital. But alright, guys, I'm gonna hit you guys up in the next one. I want you guys to like, comment, subscribe, and yeah, let's do this together.